Volatile 24 hours of trading in the bond market. Recall yesterday when the Fed made their announcement that they were raising the Fed effective 75 basis points, 10-year note yields were trading around 345, only to trade lower down to about 330. In the subsequent overnight session, we saw yields move back higher, back up close to 3.5%. So yields initially knee-jerk lower, then move higher. Then come into this morning, we had some weaker data, manufacturing and housing. We saw yields moving lower, culminating in this afternoon's move when stocks started to break to the downside. We saw yields move lower again. So again, starting yesterday at around 2 o'clock Eastern time, we were trading at 345. Today, at about the same time, we see yields moving lower down around 325. So we're 20 basis points lower in yield since the Fed raised rates, since they continue to do their quantitative tightening, and since the market has already priced in another 75 basis points next month. The market seems to be very much disconnected here, and a lot of that will get sorted out over between now and July, but ultimately uncertainty reigns in the market right now as the data versus the Fed versus the global growth numbers, all this coming into the mix here. And overnight, we saw the Swiss National Bank and the Bank of England both raise rates. So not just the U.S. raising rates here now, it's sort of a global central bank hike-a-thon, we'll call it, as all look to fight inflation, which is rising across the globe, not just here domestically. Now, what does this mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility has been moving higher. And now yesterday we did see a dip lower after the Fed. After the event passes, typically volatility goes down. But even though yields were down today, we did see volatility going higher. Again, uncertainty on the rise. How are all these central banks going to continue to raise rates amid slowing economies with high inflation? That has yet to be answered, and that type of uncertainty is when we see volatility moving higher. It's exactly what it did today, despite the fact that yields move lower. Lastly, what do we have tomorrow to end the week? Well, we've got the industrial production and the capacity utilization numbers. Those will likely get overlooked a little bit. We also have the leading indicators index coming out. And that has been trending lower since February, but ultimately it's going to be more about this Fed fallout and where the market is going to go. Where will it find its sea legs, so to speak? So keeping an eye on volatility. As volatility rises, it means more things are uncertain. Likewise, yields dropping suggests that there may be a little bit of a fight to quality here as equities go down, but clearly there's a path out there, and we'll hear more from the Fed next week when the blackout is lifted after the holiday. But ultimately, 10-year note yields again, yesterday at 345, rally, sell off down to 330, then rally up to 350, and then end today closer to 325. So a very volatile 24 hours of trading in the buy market heading into Friday's session.